Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast, and I'm your host, Beau Eckstein, and today we're going to talk about a recent funding and kind of an overview of how it worked, and I think this will give you a good understanding of what we're doing here and how we analyze properties for funding. So this was a 20-unit building, multifamily, and so when we first looked at it, it appeared that the occupancy level was about 85% occupied. And so as we dove in, the actual collections were a little bit lower. And so as I am interviewing the sponsors or the borrowers on this, I'm asking them about their experience level. I'm asking to get a copy of a personal financial statement, a schedule of real estate owned. And this is all giving me clues of where the best funding will be for this particular deal or scenario. So one is what's the occupancy and the property type, and then two, sponsors background. And these sponsors owned a bunch of real estate, but they didn't own any buildings that were 5 units or greater. So they actually didn't own any multifamily properties, commercial properties, right? So that's a no-go for agency debt. Agency debt, you got to have experience with a similar type property. So even if you have a bunch of duplexes and fourplexes, it's often going to be pretty difficult to fund with agency debt until you get your first multifamily under your belt with some ownership history.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
Secondly, the reason why agency wouldn't be a good fit for this, a small balance agency loan, would be because the occupancy level was under 90%. And typically on small balance agency, they want to see a T3 trailing 3 months, trailing 3 months of P&L showing occupancy at 90% or greater. So obviously this didn't have the occupancy requirements needed. So then it was going to come down to, okay, what's the play? They were going to do some value add, fill the vacancies, do some sprucing up of the property. Some of the units were turned over and remodeled, but I think there's about half that weren't. So they have to put some CapEx in there. So maybe a bridge loan would work, but if you're going bridge, the rate's not that competitive. So what I did is I went out to my bank and credit union partners and was able to secure a 10-year fixed loan amortized over 25 years. Bank and credit unions, by the way, typically they base their amortization on the age of the property. Some of them will go out 30 years, but often times 20 or 25 years, depending on the age of the property. So shopped it around, put a package together, shopped it around to a couple local community regional banks. And I ended up identifying a very, very good deal with a credit union. And so just to give you kind of a look at this, we were able to borrow 80% of the purchase price, 10-year fixed, 25-year AM, and the rates fixed for 10 years at 3.5%. So what we do on the brokerage side is really we package the loan together. We get all the pieces, and then we look based on the borrowers or the sponsor's background and the property itself where the best fit's going to be. And so the other thing that's really cool about this loan is there's no prepayment penalty. So their strategy is to do a value add and pump up pump up occupancy levels, raise rents, and 2-3 years from now, their expectations that this is going to be a $1.6 or $1.7 million property. And then what they can do is they can refinance, pull back their equity that they put into the deal. Now they're in the deal with no money down, essentially, and they're cash flowing a good amount. So that's kind of the goal, right? Now they have the capital back, they can redeploy it somewhere else. So that's what I help investors do, is we look at, what you're starting with, what you're working with now, what's the property like, what are we going to do with the property? Is it a value add? Are we going to try to get out of it in 3 years? Are we going to refinance or sell it within the next couple of years? Because that's how we're going to figure out what loan makes the most sense. Because if you go into a small balance agency loan, you're stuck in a prepayment penalty. Okay, so that wouldn't be the best thing, because some of those prepays are yield maintenance, and they can oftentimes have a very, very expensive prepayment penalty. I'm seeing a lot of people trying to get out of deals, but they can't because their prepayment penalties are so costly, and they're just like, okay, we're stuck. So I always want to give the best options I can, and that's why I go full circle. Are they going to hold it long term? What's the occupancy level? What's the play? Is it already stabilized? And then we determine the best fit, and then we basically shop it until we get the best terms we can for the sponsor/borrower. So just a quick update on a recently funded deal, and how we look at them, how we price them, and how we get them done. Hope you enjoyed, and I'll see you on the next episode.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.